And now for a closer look at trading on the local market, I spoke earlier to James Rosenberg from Macquarie Private Wealth. James Rosenberg, the market clawed back a good part of the early losses, but how brittle is sentiment?
Well, techie sentiment certainly is brittle, but it's also fickle. About 2 months ago, the market was very concerned about US 10-year bonds reaching 4% and what the implications were for US growth. Now those bonds have plunged to be yielding 3%, and there's still concerns about US growth from another side. So fickle, brittle, the fact is that it is weak, and that has weighed on investor sentiment and seen weakness in global markets over the last 24 hours.
More mutterings about a double-dip recession in the US. How serious are these mutterings?
Well, it's certainly what spooked investors and seen the sell-off. But if you have a look at history, it would appear to be very unlikely. In the last 50 years, there's only been one double-dip recession, and that was back in the early 80s. When the US recovered in 1998 and also from 2001, there was a couple of instances of quarters having stuttering economic data and fears at those times of a double dip. It could well happen, but it's not going to happen in the next 3 or 4 months. The data suggests that it's highly unlikely.
Back to local stocks, and Lendlease didn't perform as badly as the rest of the market. It's just signed a big development contract in Queensland.
Yes, and it is a relative thing. Lendlease were down 6 cents, about 0.8% against a 1% decline for the broader market. And it's a terrific contract for them. It's $2.5 billion developing the old exhibition ground. It's going to have a hotel for 200 beds. It'll be office space, 1,800 residential apartments, retail space. It's not greatly surprising. Lendlease were announced as the preferred tenderer in May last year. But it's very good to see and a positive for the company.
Well, so long as the ECA stays in place. And another poor day for Downer EDI, which is selling the rest of its stake in oil and gas drilling business MB Century Drilling.
Yes, this was a business that 51% of it was sold about 3 years ago with a call option attached to it. And my suspicions are that the sale of the remaining part of that business today is more about the call option than their desire for money. However, it is a fact that since that company's had a cost blowout with their rail contract with the New South Wales government, they've been under tremendous pressure, and the money that they'll get from the sale of this will be used to pay down debt, but it's sadly not enough to attract any positive sentiment to the company, which continues to struggle in the market. It's certainly finding it hard to find friends.
Bit of a damp day all round. James Rosenberg, thanks very much for joining Lateline Business.
Pleasure, Tikki.